Right there, folks, welcome in. Tesla's up first. We're in the middle phases of Tesla's growth story. This is Dan Ives. Want to hear what Dan Ives has to say here? Let's get into this.
Bring in Dan Ives, Managing Director of Equity Research with Wedbush Securities. Great to see you.
Hey, great to be here.
Very, very busy times. You don't even know which piece of this to start with, and you've been quite clear about how bad you think this strike is going to be for the big three if they get what they're demanding. Is there any way in which Tesla also comes out a loser here? Because its workers demand more, it tries to unionize them or something to that effect?
Sure. I mean, there's always been a fear of unions at Tesla. I just see that as basically minimal probability that's going to ever happen. I think Tesla, it's a win-win situation because when you look at the big three, what's happening here, it's a debacle in Detroit because ultimately this is going to be passed to the consumer when eventually they do get a deal. And the EV strategy, I mean, this is a gut punch to borrow Farley what they've built over the years. And I think that's really the frustration right now in this Rubik's Cube, where I believe the UAW deal, if they took that, it would essentially impair the business models for us in the next decade.
For the big three, that is. It will impair the business model because they'll be forced to pay so much more to the workforce that they will not be able to invest in the conversion to electric vehicles?
Exactly. I mean, if they actually sign this deal, I mean, these business models, the street would basically view it as an Everest-like uphill battle to ever be successful because it's ultimately one hand tied behind their back. They're going up against non-union Tesla, non-union Rivian, foreign automakers. And that's why right now, champagne on ice has been for Tesla in terms of the pending competition that's coming out of Detroit. And that's why this UAW, it's a nightmare on Elm Street in terms of what's happened in Detroit.
Why is it that Tesla...
And here's how Tesla could use this as a longer-term advantage to kind of, let's call it, not unionize the Tesla workforce, in my opinion, okay? So what's going to happen here with these big automakers is, one, obviously their costs are going to go up immensely. It's going to hurt their business. Their numbers are probably going to get much worse over the coming years. And they're also likely going to end up moving production over the coming years down to Mexico. So Tesla's going to be like, okay, if workers want to unionize, you can, but just understand that's what all these other automakers did. And now they're just going to end up shifting. They shifted their production to Mexico, right? They're not putting up the sales volumes because they had to raise price a lot. And so those same workers ended up getting fired, right? Laid off, hours cut, right? Plants closed, factories closed. So that's what's going to end up happening. So if anything, I think, Tesla's going to be able to give this as an example longer term, 5 years out, 7 years out, on why there should not be a union, in my opinion.
Demand has been so soft. Is it simply that they've overproduced and they can't cut prices enough because there's just no pent-up demand additionally for EVs? And there's another, but why is it that those delivery numbers and that they have so much excess inventory right now? How long is it going to take for that to be absorbed?
So we think it's really fourth quarter. I mean, if I look overall, take a step back, if you look at 1.8 million, what I believe is going to be deliveries for the year, that's a super strong number relative to the environment. I think margins trough, and Phil's talked about that as well. Q4, I think you have Cybertruck that starts production, a refresh of Model 3. And I think in China, they actually start to gain more share. That's why, in our view, this is more of what I view as a pause into the next phase of the Tesla growth story, which is why we've been telling our investors here, you continue to own this name.
How did they go from not being able, a year ago,
the one thing Tesla needs to have work for them. That's just their biggest headwind Tesla has right now has nothing to do with any other automakers or anything. Biggest headwind Tesla has right now that's hurting them is interest rates. It's just much more expensive to get a car loan today than it was 18 months ago and certainly 24 months ago. It's a whole different ballgame, folks. And so it's hurting Tesla's margins considerably in the short term. It's not going to be like that forever, I can tell you that. But for right now, it's hurting every automaker, but it's certainly hurting Tesla, right?
To meet demand to the situation where they are right now.
Yeah, look, demand definitely softened. We've seen that in China in terms of essentially a price war that's happened in China. But I believe the poker move of cutting prices, that was the right thing. I think we've seen it in the stock in terms of stimulating demand for Tesla. But no doubt, they are definitely going through a transition in terms of what we're seeing with demand in the U.S. globally. But if you look at scale and where we believe they could get to production, we're going to be looking at next year or two a company that's going to be 2.5 million, ultimately in the 3 million, what they're going to see from a delivery as well as a production. I think this is just, Tyler, in my opinion, this is just what I'll call the middle phases of the next phase of the Tesla growth story taking place.
So something super important to remember in regards to Tesla's margins and their future profitability is very important, is Cybertruck likely should be a massive help to margins and profitability starting at some point in 2024. Obviously, you have that awkward, let's call it, stage of ramping a vehicle, and you have problems that arise, and so the first quarter or two of producing those vehicles aren't usually very profitable, and sometimes you can even lose money. But once you get up to scale, but remember, when it comes to pickup trucks, like, that's usually the most profitable segment for automakers. Like, it's the holy grail. And so don't be surprised if Cybertruck ends up being just an incredibly profitable vehicle, and the most profitable vehicle we've ever seen, and the best margin vehicle we've ever seen from Tesla over time. So we'll see how it all plays out, obviously, but I wouldn't be surprised if Cybertruck's margins are incredible. Let's just call it on a longer-term basis.
Wonder though about competing with BYD. I mean, they have more models. They update them more quickly. They have more colors. You know, it's already, Chinese models are like some of the top selling vehicles in Europe already. They also have what's the smaller one with the four letters? Anyway, it's not just BYD, which is formidable, but there's other Chinese automakers as well. And you read about these are not like, you know, low cost, cheap businesses. BYD is like, it's like the Japan of the 2020s in terms of the impact that Japanese automakers had on the market back then. So you do wonder if Tesla, even having an advantage to the big three, how does it not get undercut? And if they keep the Chinese cars out of this market, maybe it'll be fine. But how does it not get undercut?
Look, this is an arms race. I mean, this is a Game of Thrones that's going on. And you see what happened in China. I've seen it firsthand. BYD, NIO, Xpeng, and others. I mean, some of the best EVs out there. I think where Tesla has been so successful is because of their ability to expand gig in terms of Shanghai, what they've been able to do from a price perspective. And the Chinese consumer, especially in the high end or rising middle class, they do want Teslas. But to your point, do Chinese EV vehicles come here into the U.S.? Ultimately, that actually becomes the issue because that's going to be...
What do you think will happen? If you have a second Trump administration, there will be presumably tariffs or protections against the importation of Chinese vehicles. I would guess.
So they're still on him from his first administration.
Well, yeah, they're still on it. Yeah. And I think what's happened right now, look what's happening out of the Beltway. Detroit Big Three. I mean, it's been gut punches from UAW. But now if you ultimately have Chinese EVs come in, that would just add to the worry. So I continue to see that as a cement wall that does benefit Tesla, benefits the big three. But right now, they're in that cage match with the UAW, where, in my opinion, that's really the frustration that's building, not just in Detroit, but across the industry.
It seems the one missing plank for Tesla would be if they had a Model 2 or some kind of lower cost mass market car that could compete against the Chinese or just make it more affordable for a lot of Americans who might be tempted to switch. But that feels like it's just way off in the distance at this point.
But I believe by the end of next year, a sub 30K vehicle is introduced by Musk, plus with Cybertruck. And that's why I just view this is in the early days, even with Supercharger and the sum of the parts. This is not an auto company. This is a disruptive technology company. That's why we're buying here, despite what I'll call definitely nothing right home about type of 3Q delivery number.
All right. Dan, thanks for now. We appreciate it. Dan Ives.
I'm shocked. I am absolutely shocked. That was even a conversation there at the end. Are you kidding me? Okay, I understand U.S. government, not always the smartest and makes some very questionable decisions on both sides of the aisle. I understand that. But let's not fool ourselves. There's no freaking Chinese cars coming in the U.S., okay? They're not that dumb. Here's the deal. The U.S. automakers are already going to have big problems to deal with. They already have big problems to deal with, right? If you want to eliminate the complete auto sector from the United States, then sure, you let them flood Chinese cars in here for $25K, $20K, $30K, whatever, and then just watch, the automakers, a dealership model that produces a massive amount of jobs. Think about how many jobs between all the parts in the United States, the factories, think about obviously all the dealership model and all the people that make money from that. Take that away. And then all of a sudden you got all these Chinese cars coming in here. Oh, what a disaster. What an absolute disaster. So, no, okay. Like I said, U.S. government makes some very questionable decisions. They're not that dumb, okay? Alrighty, Tesla, Tesla. So we just went back over a 1,000% gain in regards to Tesla, Tesla here today. Obviously, big day in regards to stock price. We were up $24,000 on the Tesla shares on the public account here today. That was up about 6% move there, okay? So, I didn't speak about this. This news was from 2 days ago. I didn't give my opinion on it. And I really wanted to let it marinate and see how I really felt about the numbers. Okay, so Tesla reported 435,000 deliveries. Okay, now last year the company did 343,000 deliveries. Okay, in the same quarter. Now some people are looking at this as like this was bad numbers. Boo, Tesla, you didn't even hit what Wall Street expected. Wall Street was talking about 461. They came in at 435. Okay, let's put a little context behind this. Anybody that says this was a bad number is completely delusional in regards to Tesla. When you did 343 and you just grew to 435, okay? Look at that freaking chart in front of you right now, okay? This is interest rates on car loans. We went parabolic over the past year in regards to interest rates on car loans. I don't think we've ever seen the interest rate on car loans shoot that high and that fast in history. Like that fast, it's ridiculous, right? We went from like under 4% car loans for interest to now we're talking about approaching 8%. And it happened in a snap of fingers. For Tesla, and we didn't even have Cybertruck help us in this past quarter. So for Tesla to put up this sort of numbers, with the same vehicles, there wasn't a big refresh in this past quarter. There's going to be in the future quarters. And obviously Cybertruck's going to be in future quarters as well, especially in 2024 quarters. To put up those numbers in this horrible of a freaking interest rate environment is outstanding. I could not be more happy as a Tesla shareholder seeing them put up those sorts of numbers. I could not be more thrilled, okay? The bottom line is those are freaking amazing numbers, and who else is putting up those sorts of numbers? Who else? No one. No one's putting up those sorts of growth rates. In this environment, these companies wait to see their volumes be down substantially over this next several quarters while Tesla's still growing like a weed, okay? This was interesting. I just had to bring this to your guys' attention. Tesla's building something called Giga Water Loop. Check out the picture of this thing, okay? No one knows exactly what it is, exactly what it's going to be used for. I know some engineers at Tesla. I could maybe reach out, but I'm probably not. I don't know what's going on there, but that's freaking cool, okay? Tesla, my Tesla being cool. I also saw this. This might be more cool. I saw this. It said, you know, if you invested $1,000 in Tesla stock, when basically Elon Musk showed off the Model S, like how much would you have now? Okay, from just $1,000 investment, right? The Tesla Model S was the company's first mass market offering. At the time of release on June 22nd, 2012, shares traded for $2.17 when the market opened. Based on this price, you could have purchased 460 shares of Tesla on that date. Tesla shares have done splits. 2020 it did a 5-for-1 split. 2022 a 3-for-1 split, impacting the overall share count. The 2020 stock split would have turned your 460 shares into 2,304 shares. Then in 2022, your share count would have grown to nearly 7,000 shares. With all of this in mind, considering a $251 share price at the time of publication, right, which is actually higher now, an initial $1,000 investment on June 22nd, 2012 would now be worth more than $1.7 million from a $1,000 investment. Oh my gosh, folks. Oh my gosh. You just look at that and you're just like $1,000 into $1.7 million. Like crazy numbers. I mean, just, you know, even when I saw it, I was like, oh, it's probably going to be like $100,000. Like in my mind, that's what I was thinking. 1.7 million, like just ridiculous. Speaking about ridiculous, Elon Musk's net worth just jumped $10 billion today, folks. $10 billion. Can you imagine that one day? Your stock goes up 6%, your net worth jumps $10 billion. What a number. What a number, okay?